Welcome back to the channel. Today we're diving into an in-depth analysis of NIO Inc., one of the most exciting players in the electric vehicle revolution. Whether you're an investor looking for your next big opportunity or just someone passionate about cutting-edge technology, this is the breakdown you don't want to miss. Before we get started, make sure to hit that subscribe button and turn on notifications so you never miss our latest insights. We're here to keep you ahead of the curve with smart, actionable analysis tailored just for you. Let's jump right in. NIO has built a reputation as one of the most innovative players in the electric vehicle industry, carving out a distinct position with a combination of advanced technology, a user-focused business model, and strategic foresight. Among its greatest strengths is the company's pioneering battery-as-a-service model, which revolutionizes the ownership experience. By separating the battery from the vehicle's purchase cost, NIO lowers the upfront financial burden for buyers, making its vehicles more accessible. This subscription-based approach not only generates recurring revenue but also ensures that customers have access to the latest battery technology over time, addressing concerns about obsolescence and battery degradation. The company's battery swapping technology is another standout. It provides an answer to one of the most significant barriers to EV adoption: charging time. With a simple stop at a battery swapping station, users can replace a depleted battery with a fully charged one in minutes. This system offers unparalleled convenience and positions NIO as a leader in infrastructure innovation. The battery swapping network is particularly advantageous in urban markets where parking space and charging facilities are limited. In terms of branding and customer loyalty, NIO excels in creating a strong emotional connection with its users. The NIO House and NIO Life concepts provide more than a vehicle ownership experience. They foster a lifestyle and community. These spaces offer a blend of lounges, workspaces, and event areas where customers can interact with each other and with the brand. This level of engagement cultivates loyalty and strengthens NIO's identity as more than just a car company. Technologically, NIO is ahead of many of its peers. Its vehicles are equipped with advanced driver assistance systems and proprietary software that enhance safety and convenience. The introduction of NIO Pilot and the next-generation NT 2.0 platform underscores the company's commitment to innovation in autonomous driving. These technologies are designed to compete directly with global giants in the EV sector, providing customers with cutting-edge features that appeal to tech-savvy buyers. The company's foothold in the premium EV segment is another area of strength. By targeting a market that values quality, luxury, and innovation, NIO has successfully carved out a niche that differentiates it from competitors in the mass market space. This strategy has allowed NIO to command higher price points while fostering an image of exclusivity. While NIO has established itself as a leader in the premium EV market, it faces several critical weaknesses that could challenge its long-term growth and operational stability. One of the most pressing concerns is the company's ongoing struggle with profitability. Despite its impressive growth in vehicle deliveries and revenue, NIO has consistently reported significant financial losses. High research and development costs, coupled with substantial investments in infrastructure like battery swapping stations, have weighed heavily on its bottom line. This creates a dependency on external funding, which may not always be readily available, especially in volatile economic climates. Another weakness lies in its heavy reliance on the Chinese market. While China is the world's largest EV market, this dependence makes NIO vulnerable to fluctuations in regional economic conditions and government policies. For example, any changes in EV subsidies or economic slowdowns could directly impact demand for NIO's vehicles. Moreover, as NIO expands into international markets, it faces the challenge of replicating its success in regions where it lacks brand recognition and established infrastructure. The company's limited product range is another area of concern. While NIO's focus on premium EVs has been a strength in carving out a niche, it also restricts its ability to capture a broader audience. Competitors like Tesla and BYD offer a more diverse lineup, appealing to a wider spectrum of consumers. NIO's narrow portfolio makes it reliant on a smaller segment of the market, which could be risky if demand in this segment declines. Operationally, NIO is vulnerable to supply chain disruptions, which have been a recurring issue for the automotive industry globally. Dependence on specific suppliers for critical components, such as semiconductors and battery materials, creates bottlenecks that can hinder production and delivery timelines. Any prolonged disruption could erode customer trust and strain relationships with investors. The scalability of NIO's innovative battery swapping technology also presents challenges. While the infrastructure has been highly effective in its home market, expanding this model internationally requires significant investment and regulatory alignment. The high cost and logistical complexity of setting up battery swapping stations in new markets could delay the company's global ambitions or limit its competitiveness in areas where fast-charging infrastructure is already dominant. From a brand perspective, NIO's positioning as a luxury EV maker can sometimes be a double-edged sword. While it helps attract premium buyers, it may alienate cost-conscious consumers who are rapidly adopting EVs in other segments. This could limit NIO's ability to scale volumes and achieve the economies of scale necessary for long-term profitability. Finally, the company's rapid pace of innovation, while commendable, carries inherent risks. The pressure to consistently deliver cutting-edge technology can lead to potential quality control issues or overextension of resources. Any misstep in product reliability or service delivery could damage NIO's reputation and hinder customer retention in an increasingly competitive market.
Discover unique gifts with Martian home prints on eBay. Looking for amazing gifts that are out of this world? Visit Martian Home Prints on eBay for a fantastic selection of unique items, including our rare and stylish flag socks. Whether you're shopping for a special occasion or just want to treat yourself, we have something for everyone. Our collection is perfect for those who appreciate creativity and uniqueness. Shop now at Martian Home Prints on eBay and find the perfect gift that stands out from the rest. Don't miss out on these incredible items. Just type Martian Home Prints or click the link in the description below and explore our store today.
NIO operates in a rapidly growing and evolving industry, presenting a wealth of opportunities that could drive its expansion and solidify its position as a leader in the global EV market. One of the most promising opportunities is the increasing global demand for electric vehicles. As governments and consumers around the world prioritize sustainability and climate action, the shift from internal combustion engines to EVs is accelerating. This growing demand creates a favorable environment for NIO to scale its operations and capture market share in new and existing markets. The company's planned international expansion offers significant growth potential. With its strong foundation in China, NIO is well positioned to enter key global markets such as Europe and North America, where EV adoption is also on the rise. Europe, in particular, with its stringent emission regulations and well-established charging infrastructure, represents an attractive opportunity. In North America, the growing consumer interest in premium EVs provides a chance for NIO to compete with established players like Tesla, leveraging its innovative technologies and luxury branding. Diversification of its product lineup is another critical opportunity. By introducing models that cater to mid-range or entry-level segments, NIO could expand its customer base and tap into a broader demographic. The company's plans to launch sub-brands targeting family vehicles and more affordable options reflect this potential. These initiatives could help NIO achieve greater economies of scale while addressing a wider array of consumer preferences. NIO's innovative technologies, particularly in battery swapping and autonomous driving, can be leveraged to create new revenue streams. Battery as a service has already proven to be a differentiator, and scaling this model globally could generate substantial recurring revenue. Similarly, NIO's advancements in autonomous driving systems position it as a potential leader in the emerging market for self-driving vehicles. The monetization of autonomous driving software and services offers an avenue for high-margin growth. Partnerships and collaborations present another opportunity for NIO to enhance its capabilities and reach. Working with global automakers, technology firms, and infrastructure providers can accelerate the deployment of its battery swapping network, improve supply chain resilience, and reduce costs. Strategic alliances with governments and local businesses in international markets could also help navigate regulatory landscapes and establish a foothold more effectively. The rapid advancements in battery technology present further opportunities. As battery efficiency improves and costs decline, NIO can offer vehicles with greater range and lower production costs. This evolution will also strengthen the appeal of its BaaS model, making it more attractive to consumers concerned about battery longevity and obsolescence. Government policies and incentives for EV adoption are a major tailwind for NIO. Many countries are offering subsidies, tax benefits, and grants to encourage both consumers and manufacturers to transition to electric mobility. NIO can capitalize on these policies to lower the cost of its vehicles for end users and support the expansion of its infrastructure, particularly in markets with aggressive green energy targets. Finally, the growing emphasis on sustainability and renewable energy worldwide aligns with NIO's vision. By investing in green manufacturing practices, renewable energy integration, and battery recycling, NIO can enhance its reputation as a sustainable brand. This alignment not only appeals to environmentally conscious consumers, but also strengthens its case for attracting socially responsible investors and partnerships with eco-focused organizations. Despite its strong position and promising opportunities, NIO faces a number of external threats that could impact its growth and long-term success. The electric vehicle market is becoming increasingly competitive, with both established automakers and new entrants vying for dominance. Companies like Tesla, BYD, Xpeng, and traditional automotive giants such as Volkswagen and General Motors are aggressively expanding their EV offerings. This intensifying competition could pressure NIO on pricing, product differentiation, and customer acquisition, especially as rivals continue to innovate and scale their operations. The rapidly changing regulatory landscape also poses challenges. While many governments are incentivizing EV adoption, regulations regarding safety, emissions, and battery recycling can vary significantly across regions. Navigating these diverse and sometimes conflicting requirements can slow down NIO's international expansion and increase compliance costs. Furthermore, any reduction in EV subsidies or policy shifts in key markets, particularly China, could negatively impact consumer demand and strain NIO's growth trajectory. Economic uncertainties present another critical threat. Fluctuations in global economic conditions, such as inflation, interest rate hikes, and potential recessions, could affect consumer purchasing power and reduce demand for premium vehicles like NIO's. Rising costs of raw materials, including lithium, cobalt, and nickel, further compound the problem. These materials are essential for battery production, and their price volatility can erode profit margins and lead to higher vehicle prices, potentially deterring buyers. Supply chain disruptions remain a significant concern, especially in the post-pandemic global economy. Semiconductor shortages, shipping delays, and geopolitical tensions can create bottlenecks in production and delivery. NIO's reliance on specific suppliers for critical components makes it vulnerable to these disruptions, which could hinder its ability to meet delivery targets and maintain customer satisfaction. Technological risks are also a potential challenge. While NIO's focus on innovation is a strength, it also increases the likelihood of technology-related issues, such as delays in developing advanced autonomous driving systems or failures in scaling battery swapping infrastructure. Any such setbacks could harm NIO's reputation and lead to loss of consumer trust in a highly competitive market. Consumer behavior and cultural differences may also affect NIO's global expansion efforts. The battery swapping model, for instance, may not resonate as strongly in markets where fast charging infrastructure is already dominant or where customers prefer to own their batteries outright. Successfully educating consumers about the benefits of this system will be crucial, but the process could be time-consuming and costly. Macroeconomic and geopolitical risks add another layer of uncertainty. Trade tensions, particularly between China and Western nations, could lead to tariffs, sanctions, or restrictions that impact NIO's ability to export vehicles or procure components. Additionally, public perception of Chinese brands in certain markets may pose a barrier to acceptance and adoption, requiring NIO to invest heavily in brand-building efforts outside its home market. Finally, environmental and sustainability concerns, while a driver of EV adoption, also create pressure for continuous innovation. NIO must stay ahead in areas like battery recycling, reducing carbon emissions during manufacturing, and integrating renewable energy sources. Falling short in these areas could lead to criticism from regulators, consumers, and investors, potentially impacting its reputation and market position. In evaluating NIO as an investment opportunity, the company presents a compelling case for growth within the fast-expanding electric vehicle market. Its innovative business model, anchored by the battery-as-a-service offering and advanced battery swapping technology, positions it as a leader in customer-centric solutions. NIO's commitment to premium vehicles, cutting-edge autonomous driving systems, and fostering customer loyalty through community-focused initiatives adds depth to its competitive edge. Furthermore, the company's alignment with global sustainability trends and expansion into international markets creates significant long-term potential. However, this opportunity does not come without risks. Persistent financial losses, heavy reliance on the Chinese market, and the challenges of scaling its business internationally are significant concerns. External threats, including intensifying competition, supply chain vulnerabilities, and economic uncertainty, further complicate the picture. For investors, these factors underscore the need for careful consideration of NIO's ability to manage costs, execute on its expansion strategy, and deliver consistent results in an unpredictable global environment.
Whether to invest in NIO hinges on your risk tolerance and long-term investment strategy. For those seeking exposure to the high-growth EV market and willing to bet on innovation and future profitability, NIO could be a strong addition to a diversified portfolio. However, the company's reliance on favorable market conditions and its ongoing financial challenges suggest that it is better suited for investors who are comfortable with volatility and have a long-term investment horizon. Buying shares in NIO makes the most sense under specific circumstances. If the company demonstrates sustained improvement in its financial performance, effectively scales its international operations, and continues to innovate while addressing market challenges. Investors should also monitor macroeconomic conditions, such as commodity prices and government policies, as these will directly influence NIO's trajectory. In summary, NIO represents a high-potential, high-risk opportunity, best approached with an understanding of its dynamic market and a focus on its ability to execute on its ambitious vision.
Thank you so much for watching. If you found this video insightful and want to stay ahead in the world of investing and technology, make sure to hit that like button and subscribe to our channel. Don't forget to turn on notifications so you never miss an update. We've got plenty more in-depth analyses and exciting content coming your way. Your support means the world to us, and we can't wait to see you in the next video. Thanks again, and happy investing.
Thank you for watching. Please like, subscribe and hit the notification bell. If you enjoyed my content, please support this channel by visiting buymeacoffee.com/Whitley or scan the QR code to leave a tip.